What is going on, everybody, and welcome to another weekly technical analysis where I go through what I am looking at for the upcoming week. It sounds like something you're interested in. Consider subscribing, as I also provide a weekly analysis that essentially gives insight into upcoming earnings events to get you prepared for the week ahead. So that way you have a mindset prep for the week and you also have technical prep for the week. So again, if that sounds like something you're interested in, consider subscribing and go ahead and drop a thumbs up to get this thing started off right. So as of right now, SPX has had a lot of major news, and the market really doesn't know how to digest what's going on. The market's been anticipating cuts, and as of right now, a lot of the data is pointing that things are very much strong and resilient. That inflation is coming down, which we are seeing slow amounts of inflation coming down. But then again, you have to also ultimately understand that even with that coming down, what is doing the damage right now is rates and where they're currently at, and that essentially will lead into a recession, depending on how quickly the Fed start cutting. And as of right now, and what we've heard over the last week, they are pretty much going to push this thing all the way until the beginning of next year, if possible. Again, things are already starting to break. They're already backstopping a lot of banks, but we are seeing a lot of businesses get hit very, very badly from the high interest rates. And then again, the projections came out last week as well. And that kind of gave us insight that there may only be one cut all year. That may not be until September. We don't really know. Again, it's highly dependent on what the data looks like and how these earning cycles play out. So with that being said, the market's been kind of choppy. Now, one thing you have to understand is coming into this week, we don't really have a lot going on. The market on the futures has gapped up. We'll see if that continues. It's gapped up quite a bit, actually. So there is some more positive news there. But what we want to look at here is we are in this. This is what is, again, very concerning, is that we have essentially gone parabolic. And I've talked about, what is this, October, when we started coming back down, the Fed essentially paused rates, and we've gone up ever since that period. Now we started consolidating here, and we have broke out in the monthly candle. So far this month is looking good. We are in price discovery mode, and considering that the futures have already gapped up, the market's going to start running until we get bad news on inflation, or not essentially inflation, but we start getting bad news on because of rates and what the damage that they're actually doing. There's something I talked about rolling into this. So as of right now, the market's going to continue to roll up until we get something that breaks, and then we essentially need a new bad a bad event to occur. Again, a recession, because people are losing their jobs, double-digit job losses, those kinds of things. Bankruptcies, big corporations essentially collapsing because of what's going on with their business loans maturing, and then ultimately understand how that plays out because the higher interest rates that they just can't afford it. So again, so we've been in parabolic since the 4,100. Again, we had a nice breakout. So we are starting to push up here. Again, I think my current price tag right now, since we're in price discovery, is 6K. We have to go by essentially all the psychological numbers. Essentially, at this point, again, that's still 500 points away from where we're currently at. We've already gapped up to 5,500 right now on the futures. So that's something you have to keep in mind. I think the 6K is the next mark. We'll see how much further we can keep going after that. Again, the market is designed to go up, so you have to keep that in mind. And the narrative that is being steered is showing a positive light, so you have to keep that in mind. Again, this is very parabolic. You don't want the market to just shoot straight up like this. Again, it's very superficial, what's an artificially held up by this massive move. So you do have to keep that in mind. And again, when we correct from that point, 42, you have to go after that 42% is essentially where your ultimately 42 is the normal correction for a recession. So you're looking roughly around that 3,200, something I even talked about when we started selling back down here. But now we're kind of back at that level. Again, that's on average. Things can get much worse than that, or they can get much better. But considering a lot of the other circumstances that we really don't have a cap on anything, we're just massively spending and GDP is going down. So is unemployment. So again, a lot of these things are very misleading to what they actually are. But again, I think we're just trying to get over the election hump. So that being said, I wouldn't be surprised if this thing breaks and potentially starts running for 6,500 unless something really bad happens. And again, that's going to be quote unquote a black swan. But we've been talking about this for a while. So again, technical wise, we held this 5,300. We retested that and we're starting to shoot up in price discovery mode. So again, at that point, you just have to go off of psychological numbers, nice round numbers, and kind of shoot for those and see where we go. Again, buying at these prices, I think, is a very bad idea just because, again, all these green candles you got and hardly any red. So you have to keep that in mind, be very careful moving forward. It's better just to wait for a pullback and then go from that point. So SPX, again, not expecting, there's nothing really planned this week. And we're kind of just waiting for earnings mode. So I can see us start going into earnings mode between now and the next 3 to 4 weeks. And then when they start reporting, we should get some more news, potentially bad news as well. So you got to keep that in mind. So you got to kind of be mindful of that. But market, because we got over this hump over this past week, again, no major events till earnings start. So we could start getting into, again, earnings mode at this point and start running up. So which it looks like we could be, especially looking at the future. So Bitcoin as of right now, again, continuing to chop within this zone. So do keep that in mind. Again, I think it will consolidate. Again, I think there'll be a price in a recession before we actually have a true bull run, especially on crypto and the rest of the market. I still think there's a possibility it's diving down to 4,500 or 45,000 before this thing starts really shooting up. But the longer this starts to consolidate, the bigger move it is going to be out of that. So keep that in mind. And typically, again, what happens when you have long consolidation like this, you get a liquidation spike that scares a lot of people out of it. And then that's when it flips and starts running. So you have to keep that in mind. It's not saying it always has to, but vast majority of the time, that is what happens. So again, still playing that 75K to roughly around this 40 or the 60K mark. It's kind of where the market's floating at for Bitcoin. So keep that in mind. The bonds are going to be big when we start cutting at a rapid rate. You have to again understand where this is sitting at. You've had some very historic lows here. I don't know if we'll have to get some crazy cuts for us to get back up in these levels, but you could potentially even see us. I think we could at least hit the 140 mark from where we're currently at. But again, the market has to rapidly cut rates for that to happen. A single rate cut isn't going to shoot us up to 140. So a lot of people are looking for bond plays for this. But again, what you're really looking for is you really want to wait and see what happens if you get massive cuts because of whatever black swan event. And again, I think we'd at least make it up to the 146 level. When that happens, I think we could really gap up. You have a couple of days notice before that happens, because if it's an emergency rate cut, essentially the Fed will come out and say, hey, we're going to cut rates here in the next 2 days. And then they'll essentially start doing that. And then you'll see a massive pop here. Again, if it's just 25 points, it's not going to do anything, but they're talking like 100-point basis moves. That means there's a lot of panic. The market will freak out. And then this will start gapping up. So this is one you definitely want to keep on the radar, especially with everything that's currently in motion right now, because I do believe it's going to accelerate very quickly when it does start to kick off. Then you have gold, which gold is kind of just, it had this breakout roughly around here, around the 200, and then it's been kind of parabolic. We are seeing some sell pressure here. Was hoping this thing at least pulled back to the 200 before it starts ripping back up. But again, we'll have to see how things play out. Again, gold hardly moves. It takes a long time for gold to really start breaking out, and it's kind of already done that. Now it looks almost exactly like crypto. And they compare Bitcoin against gold, digital gold. So, but it does look exactly like that. It's against a hedge against inflation, against uncertainty, and that's what we're continuing to see there. Now, Tesla. Now, they had their shareholders meeting. Some great news. They're forecasting. Elon Musk even brought up Cathie Wood's projections, roughly being around 2,600. I highly believe FSD in humanoids will get there. Some of the really bullish cases are crazy to think about, but I think it's a very strong possibility. Humanoids being about a $25 trillion, and then FSD being roughly around $8 to $10 trillion alone, just in those two things alone. So again, I think this thing over the next 5 years is what they're aiming for. So again, that's kind of what I'm looking at. I think once we price in a recession, this thing will hold this wedge. I think we'll continue to see chop roughly around the 200 to this 165 mark. I think we'll continue to see the chop to the back half of the year. And then this thing, once the recession's priced in and all that, I think that will be the breakout period. Once it breaks out of this massive wedge, I think Tesla will really start, once you start getting more over here, which is looking like into 2025. This thing may be nasty for the next couple of months, but if it can hold this wedge and it gets over here, I think we get a massive rip up from that point. So with Tesla, I think it's really just being patient. If you don't want to play the chop, obviously you run the risk that something can happen, and Tesla does do well. This is why I like being in Tesla for longer periods of time, because it has a cult like following, and when it starts gaining momentum, it goes quick. So we've seen that here when people thought it was dead, going down to $80 or $60, and then all massively it started ripping up like crazy. That tends to happen with Tesla. That's just the way Tesla trades. So just keep that in mind. Intraday trading isn't the greatest, but again, if you can get anything up here around the 200, you can say could potentially look for a some selling if Tesla does get up here, and it's really again holding roughly this 167 really good. So watching that there. Shop, I had brought this one up before. It did tag essentially this this way, or this upward trend here, and it started to pop back up. It is hitting daily resistance though. It'd be interesting to watch how this thing does play out this week. Trying to fill some of this gap fill. I don't know, it could potentially go back up to 75. But ultimately, I think it's going to flip and come back down shortly. Again, it couldn't. This could be this dip, and now it's going to start running back up, especially going into earnings, unless we get some really bad earnings. So right now, I wouldn't say this is so much an entry. I gave the entry back over here during the consolidation. So just continue to watch this. So I want to watch the dips. It might maybe making a higher low, but I think that 70 mark is going to be important, and the 75 mark is going to be important coming over the next week or two. So we'll see what happens there. PayPal I've been bringing up quite a bit. It's kind of getting good in that buy zone again. If we can get this down to 57, thing is, if we start pricing a recession, are we going to see 50 again? Could be a strong possibility, but one I do want to definitely keep on the radar. As it's been consolidating nicely in here. This is a really good buy zone here at the 58. Again, for a longer swing, I think this would be good. You have to be prepared whatever can happen during price in recession, so you do have to keep that in mind. But we're watching this very, very closely. And then Snow, I've been talking about this one. It's held this zone very, very well for a very long period of time. This is definitely a buy zone, the 125. I'm not saying it can't go lower. It can go lower. It's gone down to 110. But I think this is really strong support, and this could potentially head back up. Again, security for a lot of the cloud, and they're essentially industry leaders. So they've already had a partnership with NVIDIA. So just keep that in mind. So it could be a potentially strong buy, and with the price target kind of really looking around that 200. Again, depending on the timing of events, it could time this to where this starts breaking out more, or it makes its round trip back up. And then what happens from that point is essentially we might start selling off because pricing in a recession, bringing us back down to this 122 level. Again, you have to understand these are weekly candles, so it's not a quick mover back up, but it slowly starts grinding up to make some nice plays, especially when it plays a zone. So wanted to bring that one up for this week as always. And then let's see, what else do we have here? SoFi, I like SoFi. Bad thing is with a recession coming, I don't really want to be holding at this level. If we can potentially get around the $5 mark, is kind of where I'm looking at this thing. Maybe this starts selling off even more. So really kind of watching the $5 mark here. It needs to hold roughly this 634. If it breaks that, again, looking for that $5 mark. I do want to kind of get in this. With the recession passes, they still got massive growth. I think they're very undervalued in a lot of aspects. And they got some other potentially new features and new products that could really help SoFi do some incredible things in the future. So I do like SoFi moving forward again, but I want to give it time and hoping that it does get around this $5 mark. So I do got essentially an alert there, waiting for that to come back down to potentially take position on that one as well. Then a lot of these are starting to pull back pretty good. So just kind of waiting for stuff to get a little bit more in better position, and then we'll take it from there. BA got rejected hardcore here after 190 or the roughly around the 200 mark, which is something I've been talking about. It's consolidated for so long here, and then finally broke out, and then get a solid retest and got rejected. So if it can't hold this level between the 200 and the 180, see this thing potentially retesting this 165 again. If it breaks this, I think we're going to bottom dive here to the 122, especially pressing into a recession. I think we could hit the 122 fairly quickly. Again, I use BA for a good barometer for where value stocks are. So just keep that in mind. So really watching that one there. Then we did have the stock split on Nvidia over the past week, so kind of watching that, but I think it needs to pull back before I even look at Nvidia. So don't really want to bring that one up just yet. But let's take a look at the banks. JPM, the world leader, is finally getting some rejection from the banks. So you're starting to see some weakness in the banks. And like I said, when we essentially back in October, it's the same thing. The bank, they paused rates and the bank started running. Starting to see some weakness here. We'll see if that continues to feed in, especially since we got a gap up overnight. We'll see how that plays out. But ultimately, right now, I think with this thing really starts selling off, looking for 169. And then hopefully I get to see us potentially in some of these lower levels. I don't really see this if we were priced in a recession. Maybe we see the 128 on financials. That could be very worrisome depending on what happens with the banks. If there's bank runs and something like that, and this is why events matter so much, because they could start feeding fear to the downside. So we'll see what happens there. Lemonade is another one I potentially like for a smaller swing position. If this can make it around the $10 mark, some really good stocks I think that you could pick up, especially starting to get in the $10 mark and stuff where you don't have to put in a ton of money. But I think they can make some really good returns. Lemonade being one of them, I think can do really well once we start recovering. Again, China has been trying to print money and get their economy back on par, especially because they got absolutely obliterated with all, especially with their home lending to their home lending facilities. With Garden and Country Garden, and the other one eludes me, but essentially them falling out, losing billions of dollars, and them trying to re-stimulate the economy. Again, it's still in a very bad position. So again, we are facing the same thing. We're starting to see Canada and Europe starting to cut. Again, it won't be long before we start doing the same thing. And then again, what we're ultimately waiting for is for rapid cuts because of whatever XYZ event is. And then that will kind of start pricing in a recession from that point and guide new fear in the market, since the narrative has been strong and resilient for such a long time. So again, you have to understand the vast majority believe it is strong and resilient despite everything going on. So that is pretty much what I got. A lot of these, I'm kind of just monitoring them to see. A lot of them aren't really in buy points, except for the ones I've been bringing up so far. But I do believe we'll get there. Just be patient for a little bit more. And I think once we get to another earnings cycle, we will definitely, every earnings cycle is going to be going to definitely need to be paying attention very closely, because something I think really bad could happen during that time, which would essentially force the Fed to start cutting. So with all that being said, that's pretty much all I have this week. It should be a very quiet week. Again, no big news. We got a lot of big news last week. The market's able to digest it. And like I said, futures have opened up high. They gapped up. So we may actually start running into this earnings cycle as people are expecting that things may be strong and resilient. But again, this is why I have the other analysis, because I talk about a lot of things that aren't strong and resilient. So when they surface, they're not out of left field, because they like to make it seem like it's out of left field. This is why I always talk about going a couple layers deep. But that's pretty much what I got for the technical analysis. Again, some potentially good plays. You just need to be patient on a couple more, like SoFi, to get more better position for those. And I think a couple of these would be some really good long-term positions. Like I like SoFi, I like Upstart, I like I can't remember the other one. Lemonade, I think, will be really good for some smaller positions. So when this thing flips and they start turning the money printer back on, I think the market will start pushing up from that point, and then we'll see what happens. Again, you have to also understand we are in de-dollarization and how that's going to affect our markets as well. So with everything being said, go ahead and drop a like. And until next time, I'll see you guys later.